All right. Today's SPY was down 0.29%, and we're sitting right on top of this support right around 448. And the first thing I want to talk about is I want to debunk this theory that a lot of people have that if you follow price action, the market's going to crash so fast you're not going to have any time to react. And today's price action totally debunked that whole entire theory, and it's all there to try to scare the hell out of you. And they're strictly just fear-mongering words like a rug pull that are supposed to try to scare you out of your position, because these people are not objective and they have no idea what they're talking about. For example, I said if SPY broke down below 452, instantly take a lot less risk on because we are breaking through a support level. And when you break through a support level, you don't want to assume you can catch a falling knife. You want to instantly take on less risk. And now you've had 2 days to do that, and below 452, we have only dropped 0.7%. And today you even had a chance to get out right below that 20 daily moving average. So if you're nervous the market's going to crash, or if you're nervous the market is going to much lower prices, you've had a ton of time to react to that without taking on too much risk. So that entire theory of the market crashes faster than you can react is totally bullcrap, and it's totally debunked with the last 2 days of price action. Now, as price action traders, we want to be hyper aware of the current levels we're trading at. And right now we are trading at another support level right around 448. And if it fails, we are going to drop towards the gap fill at 443, which is going to be another $5 drop you should be aware of. Now, keep in mind, even if we go down there and fill that gap, that is likely going to be our higher low before we continue higher to another higher high, because we are in a bull trend. I'm going to likely do a weekend analysis of the weekly chart of how the bears continue to get this market wrong, and I'll talk about all of these critical levels in more detail. But what you need to know in the short term is that we are looking for a higher low before we go even higher in this market. You can disagree with me all you want, but that is likely what the market's going to do. And if you go back through the market all of this year, I have said that same exact thing, and I told you exactly where we were likely going, and we've exceeded most of my targets and hit targets even higher than I expected to be at this point in time. So this is a very bullish market, which is very evident by the chart, and you need to be a bull in a bull market. Do not buy into the fear mongering, and do not buy into all of the fear about how the market's going to crash. Those bears are losing their ass, and they've been wrong all year long, and you should not be buying into that fear. Manage your risk around critical levels and understand the risk you're taking on with each and every trade, and continue to respect the fact this is still a bull trend until we break down and start making lower highs and lower lows. It is only then that you should get bearish, and only then that you should start swing trading short positions. So right now, going into tomorrow, we are very likely going to have a bullish day, and there's a lot of reasons why that is likely going to be the case. But all you need to know going into tomorrow is to manage your risk right here at SPY 448, and if we break below it, you're looking for 443. It doesn't get any simpler than that, so there's no reason to complicate it. And if we go higher, we are looking for the gap fill above 455. So manage your risk from 448, below it, we're going to 443, and above it, we're going to close the gap above 455. It doesn't get any simpler than that. On the NASDAQ 100 triple Qs, we were down 0.16% today. So again, we're not crashing. The market isn't getting a rug pull. We're not going anywhere too fast for you to react. And the price action is giving you plenty of time to get out of the market if you want to do that. So again, don't buy into the fear. It's all crap, and there's nothing valid in any of those statements that the bears like to make. You are not getting a crash, and you are not getting a rug pull. If you wanted out of this market, you've had a ton of time to react and a ton of time to manage your risk. So on the triple Qs, I'm going to make it very simple for you. Manage your risk right here at the breakdown at 375. Above that, we're going to fill the gap above 380. And if we get rejected from it and continue lower, we're likely going to fill that gap above 368. Doesn't get any simpler than that. Manage your risk around one simple level, and you have 2 price targets, whether we're above or below. So you can either short to the lower target or go long to the higher target, or you can sit in cash and do absolutely nothing. It is completely up to you. So pay attention to that critical risk level at 375, and if we break above it, instantly get more bullish. On the Dow Jones, we were down 0.21% today, and again, we are not crashing in the Dow Jones. We did break down below support at 353, and I told you that below 353, we could go down here and fill the gap at 350, so that is likely where we are going. But again, once we fill that gap, that is likely where the bulls are going to find support, and then continue climbing higher towards that target at 360. So right now, manage your risk at 353, and as soon as we break above it, you're getting more bullish for the gap fill above at 360. On the Russell 2000 IWM ETF, we were down 0.28% today, and again, still not crashing, still sitting above support, and still giving you plenty of time to get out if you're getting nervous and think the market's about to crash. So again, all 4 indices, no rug pulls and no crashes, and plenty of time to react. Don't buy into those narratives, they're all fear-mongering bullcrap. There is nothing on these charts that are telling you we're crashing so fast that you can't react. On the IWM, manage risk right here at the 20 daily moving average and this support zone between 193 and 194. And if we break below it, look for the gap fill at 190. And again, that is likely going to be where we find support before we continue higher. On the ARKK ETF, we were down 1.07% and we are coming back down to this critical support zone because remember, we had the breakout of the bear market resistance. And when you get a breakout, you are looking for a retest of that breakout before you go any higher. If you are going to validate the bull trend and breaking out of the bear market, you need to see this price action. So this is what we are waiting for. I'm looking for strong support between 45 and 46. And if we bounce from here and continue higher, that is likely telling us the ARK ETF is going back into the bull market. And we do have a gap to fill just above 48. On the VIX, we were down 1.06% today, and the VIX was way outside the upper Bollinger Band, and we are likely going to start seeing the VIX crush because we're outside the upper Bollinger Band and some of the fear is starting to die down, which means we're likely going to see the VIX heading back down towards 15 and likely all the way down to fill the gap just above 14. So that tells us the market's likely going to go higher as the VIX is starting to crush. However, while the VIX is above 15 and those indices are still below some of that critical breakdown of support, which is now resistance, simply manage your risk so that you don't get caught off sides if we continue to see more selling. It's a very simple plan and it's very simple to execute. On Bitcoin, we're currently trading right around 29,000 and we're still below a negatively sloping 20 daily moving average. So in order to get more bullish, I would like to see Bitcoin trading above 30,000 to 31,000. That tells us we're likely breaking out of this phase of consolidation. And it does look bearish while we are below 29,500. So just be very cautious if you're buying Bitcoin here. Just know we could be going lower and we could be coming down towards the support at 28,000 until we break above that resistance. On Tesla stock, we were up 2.05% today, and Tesla did exactly what you would expect to see it do, which is bounce off of this rising 50 EMA of support, and we're bouncing back to the negatively sloping 5 EMA, so we are still in a downtrend until we can break above this high right around 270 to 274. So I would simply wait until we get the breakout, and then you can get bullish for the gap fill above 289. If we continue lower and we break the support right around 250, then we're looking for the gap fill below at 235. On Apple stock, we were down 0.73% today, and we came down to fill the gap down here right around 191, so that gap is now filled, and we did have earnings after the bell, so there's plenty of volatility we're likely going to see tomorrow, so I would manage a risk around this level right here, right around 190. Below 190, I will be looking for us to come down towards 188 or the 50 EMA at 187, and that is where the bulls need to make a stand, because if we break below that, that means we're breaking out of the bull trend, and we're likely going to see a correction in Apple stock. So the critical pivot will be right around 190, and below 190, we're looking for 187 to 188, and then we can get a lot more bearish if we break that support. To the upside, we're looking for resistance right around 192 to 194. So jumping back over to the S&P 500, you've now had plenty of time to react. If you think the market's going to crash and we're going much lower, then simply manage your risk and just sit in cash and wait for a few more days to see what the market wants to do. I gave you very clear risk levels, and I gave you price targets to react to above or below those levels, so you know exactly how to set up your trade plan. Whether we go higher or lower, you know exactly where we're likely going, and you know where to manage your risk from. This is the process of how you become a disciplined and profitable trader using price action, and this is the process we use each and every day on the Stocks Channel Discord server, and this is how we continue to crush the market. If you want to come crush the market with us, consider joining Bank Trade Alerts or the Stocks Channel Discord server, and you can find out how to join either of those services by clicking on the link in the description of this video. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.